How to buy Hong Kong and US stocks with M+ Global. First, you have to open an online trading account. It only takes 5 minutes to complete. Make sure to prepare your IC, bank account statement, and relevant documents. Launch the M+ Global app and enter your email or mobile number to register. Proceed to log in and choose Open Account. Select Market, Account Type, and fill in the required information. Then proceed to face verification and input your signature. Once that is done, your account registration is successful. Now, it is time to deposit funds into your account to start purchasing shares. With M+ Global, there is no need to exchange your cash deposits for foreign currency, and there is no transaction fees. Click Deposit and choose Online FPX to deposit quickly. It only takes 5 minutes to complete. Once the funds have been confirmed and submitted, the next page will indicate a successful deposit. If the transaction is indicated as under reviewing, kindly provide the additional details required. Once you have made your deposit, it's time to pick the stocks you would like to trade. Click Market and select the Hong Kong or US stock market. You can choose from over 10,000 stocks. Tap Sectors to view the best performing categories. Tap Top Stocks to filter stocks according to their percentage change in price. Tap Most Active to sort by volume and turnover. Found a stock you're interested in? Add it to your favorites immediately. You can also add to your watch list so you can check it anytime. Use the Edit function to add or delete your selected stocks. Create groups to organize your stocks via drag and drop function. Stay on top of the market with M+ Global's real-time market data. Now, it's time to start trading. You can search directly by the stock name or code. Choose whether to sell or buy, click Order Type and select Market to buy or sell at current market price, or select Limit to choose your price. Enter the share quantity and other information, then submit the order. How to check if your order has been executed? Just click on Trade Orders to check. If you want to modify the transaction price, just click on today's order to change it. Congratulations! You are now the proud owner of your first Hong Kong or US stock. Don't forget to subscribe to our YouTube channel.
M+ Global, winning the world.
The electric vehicle industry is now the talk of the town. Start trading EV stocks now with M+ Global. Driving an EV is no longer an unattainable dream, and in the future, the EV industry will be one of the fastest growing industries in the world. Many EV brands have also started to appear in Malaysia. Brands such as BYD, BMW, and Tesla have all entered the Malaysian market.
Electric vehicles are not just vehicles. They have the ability to shape the lives of all Malaysians. With smart mobile living spaces and autonomous and comfortable driving experiences, this technological revolution will bring immense potential to the Malaysian market.
Driven by policies and growing demand, the EV market has plenty of potential. So how do you, as a Malaysian investor, seize this once-in-a-lifetime opportunity to invest in EV stocks? Let's use the US stock Tesla as an example. First, enter the stock code TSLA or the stock name Tesla. Once you enter the stock details page, you will be able to see the live stock price. You can also view basic stock information such as market capitalization and technical trends. You can customize the time range for the share price movements from 1 day to 5 years, and even from the company's listing date up until now. From this chart, you can see that Tesla's share price has continued to rise from $21.80 to $182 per share over the past 5 years. It has risen more than 7 times during this period, far outperforming the broad market average. There is a wide range of stock analysis tools available to help you make a more comprehensive analysis, such as capital flows, the latest updates, and various fundamental indicators. This includes ROE, earnings performance, net profit margin, assets and liabilities data, and cash flow, and more to help you stay up to date with the latest company news. If you want to trade a stock, click Trade and enter the number of shares. Then click Buy or Sell to place your order. An order has been submitted message will be displayed once the order has been placed. When the order is matched, the transaction is now complete. With M Plus Global, you can trade a variety of EV stocks in the US and Hong Kong stock markets, as well as diversified investment vehicles such as ETFs to help you better allocate your investments. There is also an information section. Click on Top News to stay informed with the latest investment trends at all times. Identifying investment opportunities is just the first step, but choosing a good trading platform is winning half the battle. Open an account with M Plus Global today and take control of all your global investments right at your fingertips.
To see more videos from M Plus Global, subscribe to our YouTube channel today.
M Plus Global, winning the world.
Hello, welcome. Good evening, everyone, and hope you have a very good day today. And today is me again, Louis here with the weekly session, and really wonderful that all of you are still with us. All this while, people thought that it is on a Tuesday that is having a session with me, but this round we have pushed the Tuesday session to Thursday. The reason being is that we have a very big event on Wednesday and we have to prepare for it, and that was our M Plus Global app launching day. So I think a lot of people have actually received a lot of news about that. We are expanding into the US and also Hong Kong. And earlier on we did already did a soft launch, but this round is a full massive one. We got media, we got VIPs, and we have KOL in that session. So really wonderful that all of you that have attended. And right now, really, we are actually targeting the US and also Hong Kong market, not forgetting the Bursa Malaysia's market as well. So today itself, we want to talk about something very spectacular, which is Nvidia's earnings review. And we think this Nvidia has a very massive and explosive earnings, and therefore we want to also put it out to see what sort of outlook that we have, and hopefully that you can actually make some money out of this situation. Perhaps right now in the pre-market session is already up. After actually yesterday, after the post-market, their results is out, they have been gapping up about 20 to 30%. Right now is also near towards the 380, 390 level US dollar for Nvidia. So what sort of ideas that we can actually use, what sort of outlook that we can actually guide the investors in order for you to perform the trade going forward. So that is one thing that you have to really focus in this event. Okay, so next we'll talk about the BABA corporate actions. Okay, so before we start this event, we just want to also highlight that these are only for reference purposes. If you want to have more detailed analysis, you can ask your investment advisors to get to make your own investment decision. So agenda for today is to talk about some market highlights. First of all, we need to understand what sort of performance that we're having in the market right now. For instance, in the US, in Hong Kong, in Malaysia. So those are the areas that we can understand what sort of movements, what sort of sentiments are there. And secondly, we'll talk about Japan movements. And we can see that Japan market has been actually moving higher over the past few weeks. And that was news that, we did talk about this on World. And soon after that, those ETFs has actually went up within past 1 month, and Japan, Japan, this index also went up as well. So a lot of all these movements are seen in the Japanese market, but not in many other countries. So what I think about one of the reason that Japan is actually moving high is because of Warren Buffett has been moving into this position here. So and also we want to talk about Oxy later on. We also want to mention about FOMC meeting minutes and also the debt ceiling. What sort of anticipation is there? And we go down into semiconductor value chain. We just briefly talk about the value chain to see right now Nvidia is at this portion here. Will it translate to more earnings for the middle value chain or even the downstream people? So that is what we want to also put out some thoughts to the investors. Then we go into Nvidia, then we go into BABA. then we'll talk about the stock picks. So basically that is the whole agenda for this session. Let's start with the market review of US. I think everyone will be wondering what sort of movements are there in the market right now for US over the past 1 week. If we look into Dow Jones, is actually down 1.86%. S&P 500 is down 1.05%. Nasdaq is only down 0.13%. So what does it mean is that this Dow Jones is the top 30 largest companies in the US, and it has been down more than just technology stocks. So which means that technology stocks in Nasdaq is actually the ones staying afloat, trying to stay afloat. And therefore Dow Jones, most of them are maybe in the conventional businesses such as banks and things like that. So those are the ones dragging the Dow Jones index for the time being. So overall, the sentiment is still quite negative in the US. But what about the Hong Kong, the Malaysia, and also Japanese situation? So what sort of movements are there? If you look in Hang Seng Index, it's down 5.13%. Okay, so that there is also one big inverse correlation that we notice in Hang Seng Index. Basically, what I think right now is that there could be a strengthening of US dollar. And normally when the US dollar strengthens, the Hang Seng Index will actually fall. So over the past week itself, actually the US dollar index has went up, and we can see that Hang Seng was being affected. That was another reason. So I think the people are looking at the US stocks down, and also the Dow Jones is actually the dollar index is actually going up, and therefore it has pushed the Hang Seng Index lower by 5.13%. What about KLCI? KLCI is down 1.46%, but Nikkei 225 is actually up 0.74%. So last few couples of live session, we did talk about this. Warren Buffett is not done with Japan. So Warren Buffett continues to search for investment opportunities in Japan. Warren Buffett has raised his stakes in 5 major Japanese trading firms, including Mitsubishi, Mitsui, and also so these are some of the very spot on news that was given a hint that people might flow into Japan. Okay, since last month, which means that in I think 11th of April, if I'm not mistaken, the date, and that was the time we noticed this piece of news. So he increased some stakes in each of these companies to 7.4%. And the ideas that was given around that time was EWJ and also SCJ, which means that it is related to an ETF that has exposure in Japanese companies. So EWJ, I think, is the big cap or the whole Japanese ETF, but SCJ is the small cap Japanese companies. So that is the whole idea behind these slides early on, which was, I think, a few weeks back. We did talk about one topic on Warren Buffett, and we did mention about this Japan idea, or Japan exposure, Japan region exposure ETF such as EWJ and SCJ. So if you have picked up some of these counters or ETFs, perhaps you have already made some good profits. So next thing we are to talk about is the Oxy. Warren Buffett has keep on buying Occidental Petroleum stock, and this has been in the news for several times. And I think throughout this period of time, although it has been not really performing, but Warren Buffett sees opportunities in this company. So what is the reason behind it? I think early on, people did ask me to deep dive into Oxy. Perhaps one day we will do that, but today the focus is on Nvidia. Okay, so Oxy itself, if you notice the correlation during the spike, the spike of crude oil price when the outbreak of the war from Ukraine and also Russia in the February 2022. That was time whereby the orange line, you can see this orange line here. So the orange line is the crude oil price. We have spiked towards near the 140, 120, 128, I think, 128 level. But it ended up, flowing downwards throughout these past 3 quarters. It has not been really performing for the oil prices, but Warren Buffett remains very, very confident that in this company, Oxy, and therefore he has continued to buy in the stakes into Occidental. So what does it mean right now here is that, what about your view, okay? So if your view on the oil price is maintaining around this 70 to 80 level, I think it's very, very decent, because even Warren Buffett acknowledges that, when crude oil is around this range of 70 towards 80 level, he is continuing buying. So which means that he also anticipates without any movements, without any volatility in these oil prices, he is comfortable. Okay, he's comfortable to buy the oil producer of Oxy at this crude oil price when it is around the 70 to 80 level. So which means that as long as at this range, he is comfortable to add on, which means that he thinks that this is a range whereby this company will actually make a lot of money. Okay, so that is first thing. And second thing is that, what if this crude oil price can actually surge higher from this point, right? If it can surge from 80 towards 90 towards 100, then perhaps this Occidental Petroleum can actually move higher. So right now, based on the technical indicators or technical analysis point of view, it seems like having a double bottom formation along the $56 mark. And perhaps once it is able to cross above 60, then the next target will be around the 66. So overall, I think if we base on the thesis that this range of oil prices is about the lowish point of the oil prices at this current moment, then perhaps you can actually look into Occidental and purchase in tandem with the idea of this very great value investor, Warren Buffett. You can follow him to hold on to this share for the next couple of years. So that is the whole idea here, because we also understand that he bought into Japan and news has came out, then Japan went up. Okay, so the idea is that if we can follow this kind of flow, perhaps there could be some opportunities to be made or money to be made in this journey. Okay, so overall, what we are seeing that technical reading seems like double bottom formation, and it can actually move up above the 60. Perhaps there is chance to hit $66 mark by then. So that is the idea on Occidental. Okay, so just now we have mentioned about the market sentiment is not great, right? So they are also waiting for this FOMC meeting to see whether there is any chance of seeing any change of tone. Yeah, get my words right. The change of tone of the Federal Reserve. Basically, the market wants to understand whether this Federal Reserve is going into more hawkish or more dovish. So the market right now wants to understand that this situation whereby the Federal Reserve will they going into rate cut position. So if there is a rate cut position in the future, perhaps the market can have a chance of going up higher. So that is the whole idea here. They want to find something out of this meeting minutes. If there is a change of tone, therefore they might be pushing up the stocks market higher. So that is the clue here. But since the news, has been having, seeing news that seeing the Federal Reserve has having split views, and the main agenda here is still to tackle the elevated inflation narrative. So overall, our view in terms of this US meeting minutes will not change much, will not have a lot of significant details that will be coming out. So my idea here is that these meeting minutes will set a tone for the market, that's for sure. Anything that we can pick up from there, whether is it hawkish or maybe dovish, then we can actually pick up to see that, let's see if they have a more hawkish tone, perhaps market will fall further. If they have a more dovish tone, perhaps the market can go up higher. So media is portraying some splitting views before the meeting minutes was being published, and our view that time was to maintain that they will stay less hawkish and they will not go into more rate hikes going forward. The two reasons that we have brought up since a few sessions ago was talking about that because whatever they have put in terms of interest rate position, it has came into effect and it has made the US CPI data come off came off from 9.1% to current position is 4.9%. So basically, it has impacted the inflation, to say that inflation has come to a more moderation, more measured position. Okay. Secondly, is that they don't have to do rate cut. Okay. Just now we have mentioned, because of declining US CPI, they don't have to increase the rate anymore. So they don't have to be more hawkish. And second thing is that second point that I brought up is that there is still US GDP growing. There is still growing economy in the US, which means that the recent GDP data was given is about, I think, 1.1%, and it is still in the positive region. So which means that they don't have to go into a dovish rate cut position. So with these two information here, we understand that Federal Reserve will remain potentially on the no increase rate or no rate cut, at least for 2023. At least for the current position, we see it will be a rate pause position for Federal Reserve. So that is why we believe that it should not go into a rate increased rate position. They also will not go into a rate cut position for the time being. So let me break it down for you based on what we can gather from Bloomberg. Is that the minutes showed that officials are split in the sense that there are voices to say that there are more voices to say on the rate pause, and some are looking at a rate cut. Okay, so that is the whole idea here. And policymakers seems to be weighing persistently high inflation against uncertainty over how much the tightening that's already been carried out, coupled with the impact of the bank stress, would cool the economy. So basically what it means here is that they are still looking at whether this inflation will go up or not. But based on what I understand from UK side of things, UK inflation has come down but still above expectation. So which means that there is a chance of the US side also having above expectation as well. But hopefully it's on declining trend. Okay, so that is what we want to see. So policymakers, if they see core inflation is going, core CPI is going up, perhaps that will actually impact their decision making going forward. But for the time being, I'm still seeing declining CPI numbers in the US, and therefore we should be also anticipating that further they don't have to do anything, and this CPI will continue to go down. Third thing, officials discuss risk posed by the debt limit showdown in Washington, which means that the debt ceiling issue is definitely a key to all these events going forward. So which means that if right now they can't have a deal on this debt ceiling issue, perhaps that will actually affect a lot of financial markets out there, or even affecting some of the bond holders as well, the debt holders as well. So who are the debt holders? US debt holders are Japan, China, and Hong Kong. So these are contributing about 40% of the debt of US. So therefore, if US has no cash, to pay out to the debt holders, perhaps that would also be a slight jittery moment for the whole market. So I think for the time being, the debt limit issue, later on we'll talk about it. But Federal Reserve also reiterate that there could be a mild recession this year. Okay, so I'm not too sure how they want to justify the mild recession. Perhaps are they going into slightly soft landing, which means that maybe 1-2 quarters of downward technical recession, then come back? Or I'm not too sure how they want to forecast this mild recession. But to me, the margin of error is very high here. What I mean here is that because the consensus numbers from Bloomberg is about 1% for 1% for this year growth. Next year is about 0.8, and next following year will be 1%. So normally over the past 5 to 7 years, the lowest GDP growth was at 1.7%. Taking out the COVID year of negative GDP growth, we can see that the lowest point was around 1.7. So which means that if people are anticipating the GDP growth to be about 1% for this year, any swing towards the downside risk of things is easy. Yeah. What I mean here is that 1% is having high margin error if next few quarters is just 0.5 or negative 0.5, negative 0.5, it's very easy to go into that position. So maybe that is what Federal Reserve is talking about, the mild recession. So I'm not too sure how they want to quantify this, or will there be any calling out to say that right now is a recession, because during I think few quarters back, we have seen the 2 quarterly consecutive of negative or contractionary period in terms of the economic activities, and therefore that has contributed to technical recession. So right now, are we saying that we are going into that direction? If yes, then market will right now react to that as well. But based on what I understand, the overall situation, overall trend is still quite positive in terms of the US market. It is already above the SMA 200 zone, and therefore we should be using that as a guide for us to understand future direction. So if it is above SMA 200, then perhaps it can go even higher going forward. So that is what I'm having. My view right now is more positive bias, because all the indices are actually above the SMA 200 zone. Especially right now, even Nvidia can be posting a very strong results that can push technology stocks even to higher position. Okay, so I think last week we talked about debt ceiling, and we want to reiterate that there is still the concern about the debt ceiling, because debt ceiling talks has been taking a pause. They want to resume. I think without having a deal right now to increase the debt ceiling, it will have huge consequences later on. If they can't, by 1st of June settle this issue, that will actually be part of the negative tone factor. Okay, negative factor that will impact the stock market going forward. Okay, so again, our view. Everything that we have taking into we have talked, we need to also put in our view, be it is it right or wrong, it doesn't matter, because at least I give you an idea of my thoughts on this. Because over the past I think 100 years, since 1917, it was about 11.5 billion debt ceiling. Throughout this period of time, no matter who is actually in the position, the administration, government, they normally will increase the debt ceiling. Okay, so throughout the past 100 years, it has more than 100 times of increasing the debt ceiling, until right now it's 31.4 trillion US dollar. So basically, so history will repeat itself, and therefore we think they are going to come out with a deal to say that by 1st of June, they should have a deal to say that yes, likely this debt ceiling will be raised, and so market will turn into a more positive tone by then. If not, the implication will be very severe. Financial system may go into turmoil. I think market crash may come if they don't increase this debt ceiling. So everything will boil down to this position here at this current moment. Okay, so I'm not too sure what is your take. Maybe you can comment in the chat section. So Janet Yellen has actually commented on the debt and make sure that everything need to be settled by 1st of June. Although cash level right now in the US Treasury is still I think in the April balance sheet, they are still showing some cash level of I think 300 billion. So do you think that debt ceiling issue will be resolved? So that is my question to you. If you think yes, you should put the answer in the comment section. But this one is not, without any prizes, so it's just an interaction part. What I can think of about these solutions that US can take is perhaps first of all they raise the debt ceiling. Secondly is they pause the debt ceiling, they don't talk about it and continue to borrow more, but that is quite unlikely for this situation. Third is to shut down the government. Perhaps that could be also just kicking the can down the road, because by shutting down the government, they can save up some money. Then they reopen, during June, 1st of June. Then perhaps there is some cash to repay. So those are the areas that I can think of. there are not many, because the hands are tight in the US government right now. If they don't settle this issue, they might be going to more implications. And if they shut down the government, they also may not really help too much. It's just kicking the can down the road. Perhaps that is just one of the ways that they can actually do, but it's not really helping that much. Yeah, in my view, shutting down the government is like during the Trump period, 2018, 2019. I think they shut down more than 1 month, and just to see whether they can save up some cash to build a Mexico wall. So that time Trump was the president, and that was his intention to build the wall, and therefore he wants to shut down. Yeah. Okay. Yeah, Melvin Lau Kaman said that raise the debt ceiling is the most probable scenario. I also think that because over the past 100 years, they have increased more than 100 times. Perhaps that is the whole intention here. Perhaps they are still in negotiation to see whether what they can do actually to pass the debt ceiling, because a lot of requirements are seen to say to Joe Biden to say that you try not to use too much money, try reduce the spending before we can come eye to eye to increase the debt. Okay, so basically what the government want right now is perhaps to reduce the debt. Okay, the debt. So if they can reduce some debt, they can reduce some spending, and that should help them going forward, because you cannot always continue to spend more, then borrow more, spend more, borrow more. It becomes a balloon. So right now they want to cap the spending going forward. So as long as it is reducing the spending bit by bit, then perhaps it can help to resolve this debt ceiling. But again, who wants to continue to reduce budget, right? Reduce spending means there might be lesser growth in the economy. So that might not be the intention for Joe Biden. Joe Biden wants to continue to spend, continue to see a good growth in terms of economy, and therefore he can continue for another term. Yeah. So right now it's just near towards perhaps 2 years down the road after his presidency election. So right now there are a lot of things that he can think about, but the first thing first is that Republicans is wanting them to look at the spending, reduce the spending before they can raise the debt ceiling. Okay. So we have talked about the market. We have talked about Warren Buffett's move into Japan. We have talked about the Federal Reserve FOMC meeting minutes. We have talked about this debt ceiling. So perhaps we can actually move into the semiconductor value chain, because this will be talking about Nvidia later on. And okay, so basically there are three main sections of this value chain. One is the design, one is the manufacturing, one is the testing and assembly. And on design part, whereby the Nvidia, Intel, and Samsung is the most famous design in terms of these semiconductor chips. By within the manufacturing segment, you can see TSMC is one of them. TSMC is perhaps a lot of they have gotten a lot of deals from different big tech giants in the world, and TSMC is one of the manufacturers that has been helping a lot of people produce these semiconductors. And Intel and Samsung has the manufacturing capabilities as well, and testing assembly is not really within the US region, but again, MCO Technology, ASE Group is part of them. And some other areas that you can look at will be manufacturing equipment like ASML and Lam Research. Those are providing this equipment to the manufacturing segment, and semiconductor materials like Applied Materials is providing the materials from manufacturing to translate to the next value chain of people. So basically these are some of the big names here. So today we're going to talk about the Nvidia, which is the design part. So if you have the design part, you are like something like the first value chain, the upstream. And this is whereby they can design as powerful chip, as many as powerful as possible to cater for the current scenario. So Nvidia has been all this while having a lot of market share. Later on I will share with you, and we'll share with you the outlook of it. So Nvidia basically has announced their results, and they have a very strong results. This is the most recent one, and it has been seeing a good growth. Okay, good growth. So this growth has been more than the expected figures. Okay, so right now the revenue is for the quarter. It's 7.2 billion. Earnings is 2.0 billion. Basically, their net income margin, okay, earnings divided by the revenue is actually 27%, 28%. So basically, you can think about going forward, if you are looking at the expectation or the outlook of Nvidia, you should be also using about 25 to 27% net income margin. So based on the results review and results financial notes inside, they also commented their future outlook. Okay, so they provided the outlook of 11 billion in second quarter. So which means that right now first quarter is 7 billion. This is actual, and they have provided the outlook of 11 billion, okay, plus minus 2%. And we calculated, okay, this expected earnings is what we have calculated based on the 25-27% kind of margins. It's about 3 billion. So basically, from earnings of 2 billion, next quarter it can go up above 50% quarter on quarter. And if we just use this very simple, mindset of, since that the boom, AI boom has just started since January, can it continue to generate 2 billion? That's for sure. I mean, since January until right now, they have translated to 2 billion of earnings. So which means that in second quarter, perhaps it can be 3 billion. In third quarter, it can be 4 billion. In next following quarter, it can be 5 billion. So that is the whole idea here. I mean, where maybe we perhaps are exaggerating, but if you are using conservative point of view, 2 billion plus 3 plus 3 plus 3, it will be about 11 billion. So that is the whole idea here. I'm looking at 11 billion full year earnings, and what sort of movements that we can actually use look at that going forward. So right now, the pre-market movements has actually is here. Okay, early on I did my slides, I was looking at just the previous high, but right now pre-market has already jumped above the previous all-time high zone. About 345 level was the all-time high. Right now it's about 388, I think, if I'm not mistaken, near to 390. So based on this kind of momentum, we might be able to see further upside. Okay, based on this momentum, we might be able to see further upside. But you might be thinking, well, what sort of valuations are they at right now? And again, if you are looking at the price chart, it has moved up from 110, towards 378 within a span of maybe 6 to 7 months period or less than that. So what sort of movements can we look from this point onwards, and what sort of outlook that can support this share price? Can it consolidate first before it go up higher? It can. So one thing right now I'm looking at is just that right now it's overstretched. First of all, overstretched, and even if we think that it can go up to 390, 400, I think a lot of people might want to take profit. But the take profit is a good, healthy consolidation before the next up move. That is what I can think of. Later on, I will share you a few reasons in terms of why I see there is an opportunity and what sort of indicators we should be using. Okay. So Nvidia, Melvin Lau comment has already asked, is Nvidia overvalued? Okay, so I can just briefly explain based on this chart, is definitely overvalued. Okay, right now it's definitely overvalued at this current historical PE of 148.2. Based on the last 12 months earnings, it is currently trading at 148 times of PE. Okay, and 10-year PE is at 44.7. It is actually more than 3 times of the 10-year average. Okay. So in order to come back towards 44 times PE, long-term average PE, the earnings has to triple, more than triple in order to pull down the PE down to 44.7. So which means that at current position, the earnings must catch up more than 3 times, threefold, okay, in order to see that it is fairly valued at 44.7. So it's pretty amazed, right? But based on what we understand from the last year's earnings, or even during the crypto craze earnings. Okay, crypto craze earnings. Why I say crypto craze is because Nvidia was also selling towards the cryptos related mining tool during the 2017 to 2022. Okay, 2021. Okay, so during the time the full year earnings was about 9 billion in I think 2021, and this if the current position that just now we have mentioned, it will be generating about 11 billion full year 24. Okay, full year 24. Then it may be just about right. Okay, or maybe just about right. But what I want to talk to you about the crypto craze later on. You just put in your mind first on the crypto craze. So valuation wise, it is likely to be very expensive because 148 times and 44.7 times is a long-term average. So just now I mentioned, earnings must be tripled in order to bring it down. At this current price, 388, it must the earnings must be able to catch up more than 3 times in order for them to come back to 44.7. Okay, so that is the idea here. So Nvidia outlook, I wouldn't look at other things anymore because they are all, I think they are all into AI wave, and therefore we believe the AI trend will dictate the direction of the earnings and also share price for Nvidia. Okay, so that is the whole idea here. So the rise of AI large language models has been coming to so fast, so quick recently that everyone can actually use their own thing or own tool to build all these large language models. So basically, the AI wave is already coming, is hitting us, and this wave may last longer than the crypto wave. Okay, so that is my view on this, because I believe that AI has more use cases, artificial intelligence has more use cases as compared to whatever that crypto has actually done. Okay, so crypto related virtual currency use cases are less, okay, lesser than AI. So that's why the differences are here, and I'm giving you the idea on this Nvidia outlook will rely and depend on the AI, and especially Nvidia market share is very huge, about 85%. Okay, so that is why they can actually you can actually see that their earnings boom so much recently is due to they have so much of market share, and since that even Google A3 supercomputer is using H100 chips from Nvidia. Okay, so this is also another point that I want to tell you, that even all these companies out there that want to tap along with the ChatGPT or even AI, artificial intelligence, large language models kind of concept, kind of business, they will need to rely on Nvidia's chip. Okay, so H100 is a better chip, and later on I will show you here. This is just to summarize for you to say that a lot of people needs to use all these chips in order to generate all these AI functions. Okay, so the price tag for A100 is lower. Then they come up with a slightly stronger chip. It's called H100, and it costs higher and have a higher price tag. So overall, all these are contributing to many of the price hike in terms of their chips during January onwards. Okay, January onwards, some of their chips can be selling at higher price. So therefore, it has translated to the earnings of this current quarter, which has just reported yesterday. So what I can see here is that overall market share, overall companies are actually using all these chips from Nvidia. I want to also bring you back to Nvidia's time during the crypto boom. Because of the graphic cards that they can actually use for mining, the share price has rallied quite substantially during 2017. That was the first rally of the Bitcoin near towards the 20,000 level. So Nvidia's crypto boom started from 2017, and since then it has touched about $72 before retracing very badly. And if you recall, during COVID time, we have another round of crypto boom it has surged, I think, towards the about 68 to 70,000 for Bitcoin. And during that time, you can see that the share price of the Nvidia has high correlation with this crypto, Bitcoin, basically Bitcoin, and it has surged from I think below 100 US dollar up until 340. So that was the highest point, and that was the peak of the crypto, or we call it Bitcoin. Okay, so that is the idea during that time. So even during just crypto, the craze was there, the euphoric manner was there, and it has went up 360% for the share price. Okay, so during that time, it has take a very good rally. So right now, what I can think of that we can use to relate this AI boom is we have go into Google Trend to search for artificial intelligence topic, and it has started since the ChatGPT time. So which means that near towards November last year, January this year, it has started to see for more and more people are using the Google search to search on this artificial intelligence, and right now it's still not down yet. So which means that the traction is still there, and therefore we believe the overall differentiation here is that crypto related is just a mining, and it has not much of use cases. Therefore, the trend has stalled for the Bitcoin, and therefore Nvidia's price has collapsed since then. But right now, it has a new trend, which is the AI related trend, and we believe that if this continuation of this artificial intelligence until it turns down, then perhaps we can see the Nvidia's share price will come down. Okay, so that is one thing I will continue to monitor on this chart, the Google Trend search topic for artificial intelligence, and we can monitor this and see whether there is any dip. Okay, if there is any dip, perhaps the Nvidia share price may also dip by then as well. Okay, so that is my expectation here. So even Nvidia has been ramping up orders recently. This was in May 11, May 19. All these are coming from DigiTimes and TSMC. So which means that they have placed more orders with TSMC, and therefore that is a good sign. So which means that demand is strong. They can sell higher price. They can create higher powerful chips. Okay, powerful AI related chips, and that will be their main source of income going forward. So I see that because of the differences between the crypto rally, crypto-induced rally for Nvidia, and also AI-induced rally for Nvidia. So these are two differences. One is slightly lesser use case. AI has more use case, so therefore the demand will be more durable, it will be longer, and hopefully that they can translate to higher share price. Even the share price recently, it has shot up more than I think 300%, to about 200 to 300%. I think since until right now, I think it's about 158% if I'm not mistaken. It can continue perhaps towards just now what I mentioned here, the 170% based on the crypto rally, or even 360%, okay, based on the next wave of crypto boom. So I'm just giving an idea that even the crypto rally, they can actually rally more than 170 and towards 360%. Perhaps AI trend could also translate to that kind of growth as well, especially if the earnings can double or triple during the earnings from the crypto craze in 2021. So crypto craze highest earnings during that period of time is about 9-ish billion. So if they can sustain the 11 billion by 2024, or even grow maybe towards 15 or even 18 billion by 2025, which means that right now could be an opportunity to look at a longer term phase, because AI trend is there, and if there is any dip, if there is any pullback on this Nvidia share price towards about, say, about 345, perhaps that could be a range that you want to look at, or even if it is dropping towards 305, 305 US dollar, that could be the range that you want to accumulate for. Nvidia's share price. Okay, so that is the whole idea here. So valuation is expensive. Chart is looking at very stretched. But if you're looking at the long term, 2 to 3 years, perhaps that could be actually one of the opportunities that we can actually look at for the technology stocks, which is Nvidia is a very powerful and very strong growth counters. Okay. So last point for the Nvidia is that BYD has a collaboration with Nvidia for the one of the chips called Orin, and I think this collaboration was done since 2022, but they have extended another year just recently. So basically, this is another space that they can actually go into because they want to build something stronger in terms of maybe the processor into this automotive segment, and provide maybe some of the capabilities of perhaps AI going forward. We never know, but definitely since that BYD is already putting some having some collaboration here, so perhaps that could actually translate to a stronger potential in the automotive space. And this recent quarter, automotive segment is actually also has been quite strong as compared to year on year and also Q on Q. So that's why this segment could be another strong growth potential if more and more car makers are actually collaborating with Nvidia going forward. Okay, so coming to the last part, which is the Alibaba announcement on this splitting of this their subsidiaries into different IPOs, and this is called a spin-off to perhaps unlock some values in all these companies here. Cloud Intelligence Group, Taobao, Tmall Commerce Group, Local Services Group, Cainiao, Smart Logistics, Global Digital Commerce Group, Digital Media and Entertainment Group. This will be the 6 new different entities going forward. Since then, it was just very short rebound. Then later stage, it has dropped, I think, from 100 to right now about 80 US dollar. So what do I want to bring out here today is that perhaps in the whole Alibaba ecosystem, the best and the most profitable segment is actually the commerce segment and the Tmall segment. So basically that is profitable. The rest is actually not profitable, but they want to find their own way to do IPO, to spin off, to unlock their value, perhaps to raise some funding by their own. That could be the whole idea here, because under one umbrella, it doesn't sort of the efficiency might not be there, and one CEO has to oversee so many businesses. So right now they are trying to put it out to many different entity, and that could actually help them to either raise fund or to have more efficient business operation going forward. So that's why we can actually look at Alibaba in terms of the total value, what sort of valuation that we can actually look at for Alibaba. So let me give you an example of like Sunway and also Suncon, and also Sunway REIT, or like the healthcare of Sunway. So if they are all under one umbrella, it will have this called holding company discount. So which means that people will have investors might not like the holding company point of view, is that because the holding company has to oversee so many different business entity, and it will spread their effort to monitor. So that therefore investors will always discount when all are parked under that kind of holding company. It will try to discount the value of the company. So for instance, if even YTL Power right now is higher value than the mother company, YTL, in terms of market cap. So that is the idea here. So overall, the investors will have, if this company has a lot of different subsidiaries under them, then the investors might discount because it is inefficient in some way, and also the tax incentive and things like that is some of the additional administration costs in holding company. So all these are taken into account for the holding company discount. So what I want to mention here is that perhaps if you have pull out Sunway Construction from Sunway and list it as a new entity, that will bring them more value, and the Sunway will release some value there. So Sunway is actually can go up higher as well in terms of this event, under this event. So overall, I'm seeing that could be happening in Alibaba as well, but Alibaba share price has not been certainly moving over the past few months. Therefore, we still are looking at this as just a conceptual play until it happens within the next 6 to 12 months. Then perhaps one by one, we can see that Alibaba can actually go up even higher in terms of their share price. One thing that is right now, I think inefficient is that because Tmall is actually this section here, I think is quite profitable, and they are subsidizing and offsetting by all these not profitable companies. So if they have all leased out all this segment here, perhaps that would actually increase, because you are taking out all the inefficient companies and giving the best segment for Alibaba itself. So the share price might also go up based on that idea. Okay, my very simple calculation for the valuation may come up to about $129 US for the share price, based on all this multiple here, which is everything is assumption. The revenue estimates based on my idea on taken from Bloomberg. Then we times a multiple then to get the valuations of that particular business. Add up, it can get about $417 US in terms of billion. And the current market cap is about 210. Based on the SOP of this, we can get about 417.5. We give a hold discount about 20%. The estimated market cap is about 334, and therefore it has upside about 59%. So current price is $81.21 US, and we estimate the fair value is about 129. So there is some upside to it, 60%. So whether you can you believe it that this should be the value, again, these are all pure estimation based on my understanding of the business and all of my assumption. So this is just the estimated fair value that I can think of right now. So technical readings on Alibaba certainly is actually following the Hang Seng Index as well. Hang Seng Index has recently been falling quite substantially, and so Alibaba share has not been performing as well. So since the April news that has came out, it has gapped up from about 88 to 105 before pulling back towards 81 right now. Could be supporting near towards the 74.80 US dollar mark, but I think right now it has been downtrending, so perhaps we have to monitor a bit before the turnaround happens. Perhaps the external factors such as the debt ceiling, all those are also impacting the sentiment in Hang Seng on Hong Kong Stock Exchange as well. So perhaps the sentiment is not right for Baba yet, but I think based on the idea of unlocking the value, spinning off their subsidiaries, that could actually help them overall going forward. So that is the idea here. So the most profitable the segment is supporting the less the negative earnings companies right now. So if you are taking all those companies out and unlocking the value by doing an IPO on the 5 different units, that could help them secure more profits in terms of Alibaba itself. So that is the whole idea here. If you are looking at right now, if they are making one renminbi, maybe they have to subsidize maybe 30-40 cents of losses. So right now they might be taking just about 60 cents in their company. But if you already pull out all these companies into a new entity, which means IPO them, then this one renminbi will belongs to the company itself, and that will generate more. That is more earnings, and that will translate more value to the company. Okay. Okay. So just to summarize everything today, we have talked about the market summary, market review. Then we have talked about why Warren Buffett has went into Japan and what sort of trade ideas that we can have in Japan by using the Japan ETF. M Plus Global app has that ETF for you to get exposure in Japan. in time, in tandem with Warren Buffett's view. Then we also mentioned about Occidental Petroleum Corp. If you are interested to trade in tandem with the Warren Buffett's view as well, you can do that. But if not, in Malaysia, we have Hibiscus as well. So you can actually look at this oil and gas company, because seems like Warren Buffett is quite bullish on the oil segment. Therefore, he is continuing to add on to Occidental Petroleum, and perhaps you also can put in money into Hibiscus as well. So that is the idea here. It translates, back and forth within that oil and gas segment. On the ETF side, that I think we have an opportunity is that if you don't want to select Nvidia as your one stock, one single stock, you can always look into ETFs to have a basket of stocks which is related to is either AI or technology or this idea of machine learning, whatever it is, robotics and things like that. So ETFs can be one of great tool to help you not to identify any stocks, but you just need to go into exposure of a certain theme, then you just buy into ETF. So for instance, QQQ will be buying into NASDAQ. Okay, NASDAQ has about 60 to 61% of weightage in terms of technology, and SOXX is related to semiconductor ETF. BOTZ is related to robotics, artificial intelligence, and Robo Global Robotics and Automation Index ETF. So these are some of the areas that you can actually look at. I think it will be very, very useful for you to also check out our M Plus Global app. You can always see at the profile, you can see who are the constituents and what sort of stocks that you are holding under this ETF. So you can actually always check through our app. Okay, so that comes to an end for my session. If you have any questions, you can actually put it in. Maybe I will take about 5 to 10 minutes to take your questions. I saw some of the questions out there. JY asked about any company in Malaysia related to Nvidia. I think the most that we can think of is Broadcom, Inari. But Nvidia, I can think of one company that is also under the design, which is Opstar, because Opstar just listed, right? So Opstar is like similar as Nvidia, but it's very, very small scale. But as of now, we have just that one as the design company in Malaysia. So basically, Nvidia, you can think of Opstar as Nvidia, very baby Nvidia, right? So that is one of the relation that you can think of right now. Bitcoin will halve next year, reducing Bitcoin in the market, thus price will go up 100k US dollar. Okay, so if you still believe that Bitcoin can continue to trade higher, then there is a high correlation with Nvidia. Then perhaps you can actually use that as one of the areas to put into that uptrend move. Yeah, so I think that could be one of the potential for you to use crypto rally to translate to Nvidia. Okay. Opstar only design chips. Melvin Lau, thank you for your comments. Opstar only design chips. Yeah, they are under the design segment. Nvidia is also part of the design segment as well. I think Opstar is very, very small scale. So yeah, correct. How about upcoming IPO? Edeltech, will it benefited from this AI thing? I think overall technology sector will be, thank you for the question, Elki. So I think overall, as long as it is related to tech sector in Malaysia, right now it is not so decent. Okay, I want to put it again. So technology index right now has dropped quite badly over the past few weeks, despite Nasdaq has been going up. But overall, the IPO, new listing of IPO, normally they can trade higher. So what I want to differentiate right now is that those that are not listed wants to go listing, like Edeltech, can trade higher in perhaps in the first day of trading. Because based on the past historical IPO, we have seen quite a multi-bagger kind of trades. But I'm not 100% sure that they will also go into that kind of position. Just that I think normally new listing, people will have more more oomph or more momentum on it, and therefore it should trade higher. So how does it benefit from this AI trend? Normally in Malaysia itself, if you are normally in Malaysia, normally you are not the first upstream company. Normally you are the testing part or even assembly part. So I think to benefit out of this AI thing like Nvidia, I think not many people can use it. Perhaps it can translate to the manufacturing sector. So if you think about the manufacturing sector, then manufacturing line, perhaps that you can look at Intel or TSMC. So those are the areas. Or you can look at manufacturing equipment, because Nvidia will ask a lot of from TSMC, a lot of orders from TSMC, and TSMC has to buy the manufacturing equipment from ASML. So that is also one of the ways that you can link from Nvidia's high demand to manufacturing sector. So if manufacturing segment is having a boom, then it will translate to testing assembly, which then will actually benefit us in Malaysia. So that is the relationship that we can think of right now. So for Aerotech, I think it's just sentiment play. If it is related to technology stocks, perhaps it can trade in a premium on the first trading day. But yeah, Melvin Lau has actually mentioned about the Aerotech CEO have court case with MeTech. So perhaps that could also dampen the sentiment a bit, although although it might dampen the sentiment, but I think the overall atmosphere or environment for IPO is still quite positive at this juncture. Okay, as long as they are linked or they are related somewhat to technology, perhaps they have some chance of opening higher on the first trading day. Okay. So that's about it for my section. Yeah, follow us on Facebook, Instagram, YouTube, and also LinkedIn, and also TikTok as well. And thank you so much for your time today. We have discussed many things, although it's very scattered around. But the main idea is that to give you some actions, okay? To give you some potential trading ideas like Nvidia, Baba, Oxy, some ETFs. If you have exposure in Japan, you can use the EWJ and also SCJ, which is small cap Japan. One is the MSCI, I think all Japan companies. So those are the areas that you can actually look at. So if you have any other questions, you can always email us, and we'll try to reply you from there. And don't forget, every week we will have the live stream. So follow us, stay tuned for more events going forward. Thank you so much, and have a